Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Two of the stocks I'm hearing a lot about right now are SolarEdge and Enphase Energy. These are two high-profile solar companies done really well for investors over the last 5 years or so. And now investors are starting to see the drop in their stocks and say, is there value in a stock like this? And I want to caution investors thinking that this is a value just because the stocks are down from where they were previously. I want to go through a little bit of history of the cycles that we've seen in the solar industry and what to look for going forward, because I think things might get worse before they get better for both of these companies. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. First, I think it's worth going over a little bit of the history of how supply dynamics work in the solar industry and what we have seen from cycles over the past 10 to 15 years. And what typically happens is that a specific segment of the market grows really rapidly. Maybe that's because there's a lot of end user demand that's happened in solar panels, or there's a specific market that's growing. We saw that with Power One and string inverters when Germany was really growing their rooftop solar installations in the early 2010s. They were the big market share gainer there, had really, really high margins, really a phenomenal business. But what ends up ultimately happening is that the growth slows, competitors come into the market, and then the product itself becomes commoditized. So if you're going to go out and look for a solar panel today, you're probably just going to be comparing very similar technologies, very similar products, and you're going to buy based mostly on price. There are a few outliers from that, but for the most part, most solar panels that are installed in the world today are effectively the same. So if you look back at the margins of companies like First Solar, SunTech Power, Q Cells, all of those solar manufacturers, they had phenomenal margins at various points in the late 2000s, early 2010s. And then as products started to get in the mid 2010s, those margins just got absolutely crushed. And there was a ton of manufacturers that actually went out of business because they overbuilt capacity and demand just wasn't there as everyone built capacity at the same time. Something similar happened in the inverter market. I mentioned Power One earlier. They had a dominant position in the inverter market, had really high margins, but as cost pressure started to come in countries in Europe specifically, that was where a lot of the growth happened in the early 2010s. Then you started to see competitors come into the market, add pressure. Installers needed to lower their costs to make installations make sense from a subsidy perspective. And you had new competition come into the market like microinverters and power optimizers. So there's pressure from both a commodity standpoint and a technology standpoint with replacement products. And these are the kind of cycles that happen over and over again. What we're seeing right now is just a new phase of the cycle. Over the last decade, we have seen these module level power electronics, from power optimizers from SolarEdge to microinverters from Enphase Energy. They were effectively mandated in a lot of markets because regulators said that an installer or an electrician needed to be able to turn off any given solar panel. That's module level control. Not just turn off the entire rooftop solar installation, but any single panel that may have had some sort of a flaw in it, maybe it got hit with hail or a tree branch dropped on it. They wanted to be able to turn off any solar panel. And that's what these module level power electronics did. So you have the tailwind of that regulation affecting both of these companies, and they both rode that wave really successfully between particularly 2017 or 2018 through 2020. And that's where we see a lot of the growth for those two companies. Revenue growth, margins were outstanding. So you see net income growth, cash flow, and at the same time, multiples expanded. The market was valuing these companies higher because they saw this growth continuing in perpetuity. But reality has hit in the last couple of years. Specifically, interest rates rising over the last 18 months has started to have a really big impact on installers. We have seen SunPower and Sunrun, who are the two big publicly traded installers in the US, start to see a lot of pressure on their bottom line. So they're not growing those installations as much as they once anticipated. And the installations that they are installing are not as profitable as they thought they were going to be. So instead of the pie getting bigger for everybody, the pie is essentially staying the same or maybe even shrinking, especially in the residential market. That's the impact of higher interest rates. Just makes the economics of every installation a little bit harder when those cash flows are valued over 20 or 30 years. So as these installers get pinched, they start to put pressure on their suppliers. Who are those suppliers? Enphase Energy, SolarEdge, solar panel manufacturers. And that's where a piece of news this week really caught my eye. This is an update from Maxeon Solar Technologies. This is the solar panel manufacturing arm that used to be under SunPower. It's basically used to be the core of SunPower's business was this solar panel manufacturing business. And they warned investors that they did not sell as many solar panels as they anticipated. That's what judged by the megawatts here. Revenue was not as high as anticipated, and they would not hit their adjusted EBITDA guidance that they just gave a couple of months ago. So this came out on October 10th. Let's go back to when they gave this guidance. This is what they said they were going to install for the third quarter, 700 to 740 megawatts, so fell well short of that. And then they said that adjusted EBITDA for the year is going to be about $30 million lower. So now about $50 to $80 million. So a big shortfall, especially when these results just came out about 3 months ago. What can we learn from that? Why did Maxeon fall along with a lot of other solar suppliers this week? Because what we're seeing with Maxeon is customers are putting pressure on them. Not only are they not buying in the volumes that they used to be, and that would be SunPower specifically is one of their key customers. So they're not buying in volumes, and they're putting price pressure on Maxeon to lower the cost so that they can actually make the economics of their business work. Again, this is part of the cycles that happens over and over again. But if the numbers don't pencil for installers, if it doesn't make sense to install a $20,000 or $30,000 solar system on someone's roof because those out years 15, 20, 30, the financial benefit just isn't what it was now that interest rates are 6 or 7% versus a year ago when they were maybe 4 or 5%. They're going to have to either lower their upfront costs or raise prices on customers. There's only so much you can raise those prices on customers, so they're going to start to put pressure on their suppliers. That's a huge reason that SolarEdge and Enphase are dropping right now. I think this is something that we're going to have to watch over the next few quarters. In particular, when third quarter results are announced, I'm going to be looking at volumes and then gross margins to see if there's pressure on both of those two areas, and then what they guide for both the fourth quarter and start to look into 2024, because I think conditions in the solar market for these suppliers might get worse before they get better. It's going to take a while for the market to adapt to these higher interest rates. I think that will happen by next summer when the summer installation season rolls around. Maybe things will be back to a little bit more normal, but that normal might not be as good as it was in the past. So a lot of context there on what has happened with SolarEdge and Enphase Energy, but I think it's important for investors to understand the history of what's happened with the solar industry, how you have these boom and bust cycles, specifically with different products. This has happened with inverters, this has happened with solar panels, and now we're starting to see it happen on the module level power electronics. Don't be surprised if things get worse before they get better, but this is a very solid business, a very important piece of the value chain. So there is ultimately value there, just don't know where the bottom is for these stocks. But let me know your thoughts on this business and whether you think these stocks are starting to become more attractive. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.